And hello and welcome to another episode of Startup Caps, your eye on startup capital movements in Africa with myself, Tanya Habimano. This week, we dive into the world of impact investing in Africa. Now, according to the Global Impact Investing Network, about 8% of assets of global impact intent funds are focused on Africa exclusively, highlighting a steady rise in investment aimed at generating social and environmental benefits alongside financial returns. Now, to give us insights for more, I spoke to Okemdi Shukwu, engagement lead at Brighter Bridges. So I want to start off by insights into what the growth trajectory has been like for impact investing within the startup space in Africa.
Yeah, cheers, Tanya. So when it comes to impact investing, it had kind of been pushed to the side a bit compared to general commercial investing that we had seen previously. But over the last few years, particularly as some of the other sectors haven't seen the returns that were expected, impact investing has become more of an area for your VCs or different LPs to focus on, particularly when it comes to impact metrics. So we're seeing a lot more growth, particularly last year and this year in sectors like ag tech, climate tech, health and biotech, etc. So they're seeing a lot more investment this year as opposed to kind of the previous 5 to 10 years before that.
What drove the increase? Why this year?
Yeah, so over the last kind of 2 years in particular, it's largely because of those returns that aren't necessarily coming from some of the other sectors. So things like your fintechs or really sectors that aren't necessarily solving particular problems. Africa is still in a place where if you move the needle with genuine solutions for the huge populations that are there, then you're going to see the returns from a commercial standpoint, but you're also more importantly going to see the impact on ground. And that's become more of a pressing question and more of an objective for a lot of VCs and LPs, particularly DFIs that are committing patient capital and are still the largest investment player in Africa.
In terms of regional distribution, are you seeing certain countries attracting more than others?
Yeah, definitely. I know we generally tend to talk about the big four in Nigeria, Egypt, Kenya, and South Africa. But when it comes to impact investing, what we are seeing are some other emerging countries like your Rwanda, Ghana. We're also seeing Tunisia, Mauritius, etc., start to come to the fore. Nigeria and Kenya do still kind of envelop the largest amount of investment when it comes to impact investing, largely due to their populations and their sectoral focus. So Kenya receives a lot by way of it being the leader in the ag tech and agriculture areas. Nigeria, obviously, with its huge population, generally impact would be seen at a larger scale on ground. And the startup infrastructure is such that it can enable investment in there. Whereas, say, your DRC or particularly Congo, where impact would obviously be an enabling factor, the startup infrastructure isn't necessarily there to receive that investment.
Now, speaking of the startup infrastructure, I'm quite curious to see if you see a difference in terms of where in the startup's growth trajectory that capital is flowing to.
Yeah, so generally what we've seen is kind of your early stage investments. So your anything from Series A, Series B, we're seeing a lot of financing in those particular areas, not so much on the SME side of things, but that's in and of itself has become a big question for DFIs and VCs and other kind of later stage investors, which is how do we enable and continue to grow companies once they pass that early stage part of their journey and enter into that SME part of their journey, and how do we enable them to continue to grow, to continue to reach new markets, etc. So those are generally the areas we tend to see them start to falling in. But we're also seeing different kinds of financing instruments like debt and credit facilities being offered in this market.
I'm sure this question you could have preempted is how is impact being measured and reporting, particularly as this is the focus for investment, and this has been a cause for a lot of debate and a lot of conversations. Is how are we measuring impact? What does impact mean in this context? What are you seeing from a data standpoint?
Yeah, so there are a number of different ways that impact is being tracked, and it's largely down to what the LPs are expecting from their VCs or from the people that they're committing capital to, and what reporting they need to have internally to ensure that the impact is being delivered on a larger scale. I think generally the one people like to pin their hat on is how many jobs are being created, how many people are being taken out of poverty, how many people now have access to clean water, etc. But now there's a real focus on honing in on what exactly that means, what numbers we're expecting to see, and then trying to enable the VCs to then train their particular portfolio companies on how to report these particular impact metrics. Because what we've seen happen is that there are a fair number of entrepreneurs and startups that are delivering high levels of impact. They're just not sure the best way of reporting their degrees of impact, how many jobs they've created, how many smallholder farmers they've enabled, etc. So we're seeing more LPs align themselves with particular impact metrics, and then that's then being fed down to the VCs or SME financing facilities, and then down to the entrepreneurs and startups.
Well, Okemdi, always a pleasure talking to you. Thank you so much for joining us today and for sharing your insights. And next up, we speak to an organisation actively involved in supporting the impact investment and philanthropy space in Africa. Frank Aswani, CEO of the African Venture Philanthropy Alliance, joins us for more. So Frank, in starting off, I want to get your perspective. We hear these words quite often, but when it comes to the definition, the difference between philanthropy and impact investing, I don't think is that clear for most of us. How do you see it?
So the difference is pretty much that they're all pursuing impact outcomes. And thank you very much for having me on the show. But impact investors are also seeking financial returns. So that's what makes the difference between philanthropy and impact investing.
With philanthropy, are we purely looking then at grants, donations, that type of work? Or is there also equity and debt instruments such as we would see in the impact investing world?
And that's what makes impact investing interesting is you bring together what we call the continuum of capital. You bring together grants, debt, or equity into your equation of trying to deliver a larger multiplier than any of those can produce, especially in considering financial and social impact. So yes, so in impact investing, we are deliberate about blending grants with debt and equity. And that's what makes it very exciting.
So then my other question is, do you find that there's a higher risk tolerance from venture philanthropists versus impact investors? That because the one is looking purely for impact return, let's call it this way, and the other is also looking for economic returns.
Yes, and that's why in the world of today, we do need the different players bringing their different strengths and different risk appetites into one place where we can blend them to produce a better outcome. So yes, so there's a higher appetite for risk from venture philanthropists or philanthropists generally, when you compare to, let's say, more financial or commercial investors. But in this space where we're trying to especially bring in more private capital into the impact space, it's so important for us to have that risk capital, that capital from grant makers that has a higher appetite for risk. One is because we need that capital to especially test and fund innovation, test new markets, new products, new services, and bring new solutions to current problems, because our old solutions are not working perfectly. And this blending of these two extremes of types of capital, grants on one side with that have a high appetite for risk, and more commercial capital on the other that doesn't have that appetite for risk but has a much higher quantum, is what will create this middle sweet spot impact investing.
When it comes to the startups, the ventures that you deal with, many have argued that the expectation for returns within the startup space is what drives innovation. The fact that you have an investor that is expecting 2x, 10x, 12x in a certain amount of time is what fuels those startups to be able to, to be more innovative, to be more efficient, and to come up with new solutions. How does this work in a space where economic returns are less important?
Yes. I mean, ultimately, you're talking about sustainability, Tanya. And when you look at the startups that many investors want to go into, especially they're putting in commercial capital, is that startup sustainable? Can it deliver these financial and social returns for a long time to come? and create that economic and financial value over time. And that's where we find that investors are trying to make sure that they find the right startup with a proven model that is investor ready, that is ticking all the right boxes in terms of having the right entrepreneur, the right structures, the right customer base, a proven model, so on and so forth. So you find in the very early stages of that startup, they probably haven't got a proven concept yet. And that's where the grants, that's where the more philanthropic partner comes in, who's got a higher appetite for risk to fund that startup to the point where there's a proof of concept. And then the more commercial player can then come on and scale that startup to a much bigger position and deliver more economic value to much more many people in the process. And that's where we find the combination of the two extremes of capital really interesting in the impact investing space, where philanthropy kind of takes that startup from where it's very young to where it's kind of middle-aged, and then the more commercial capital takes it to maturity.
Okay. Doing well and doing good are not mutually exclusive. This is where we leave it. That was Frank Aswani, CEO of the African Venture Philanthropy Alliance. And now let's hear from an investor who can share more perspective on the realities of investing with impact in mind. I'm joined by Miriam Diop, Regional Head for Africa VC, Direct and Funds at the International Finance Corporation. So you come with quite the experience when it comes to investing on the African continent. I'm quite curious to understand, how do you view impact?
First of all, I think impact is definitely a critical component of our investment strategy at IFC. As an investor in Africa and as an African woman born and raised on the continent, my focus always extends beyond just the financial returns. For me, impact in Africa means finding a path out of poverty. It's really about making financial returns while also creating and sustaining prosperity for our continent. I really operate from a strong belief that entrepreneurship and innovation can alleviate poverty. I often look at countries like China and South Korea. They have both transformed and reduced their rate of extreme poverty in just a few decades. But on the other side, it's concerning that some African countries are even poorer today than they were in 1960. And at the same time, this population momentum is real because Africa's population will soon double, and 40% of the world's workforce will be based here. It means it's more urgent today than ever that as investors in Africa, we view impact not just as a desirable outcome, but also as an integral part of our investment philosophy. That's what we do at IFC. And it is possible. As a venture capital investor at IFC, we definitely prioritize investment in businesses that address pressing social challenge, but at the same time create jobs and stimulate local economies. For example, this is basically what led us to invest in a company in Senegal called Wave. It's a fintech company that has made social services in Senegal and Africa. They have today significantly increased financial inclusion there. They've not only enabled people who previously had no access to banking services, but they also have empowered thousands of micro SMEs and created thousands of job opportunities. And we also invested in a company recently called Anka in Ivory Coast. They have supported over 2,000 merchants of African creative industry products, enabling them to sell, ship, and pay globally. And 80% of their merchants are actually women. This is what impact means to me.
And we very much sense the word urgency, particularly when it comes to the African continent, as you've mentioned. Now, if we look at the VC capital flows in the recent years, a big focus has gone towards fintech as a sector, leaving other key national priorities such as healthcare or education with less available capital. Do you think this is justified?
Well, I would say yes and no. First of all, we were talking about impact earlier, and I believe mobile money platforms such as M-Pesa or even Wave in Senegal play a key role in reducing poverty and lowering transaction costs. They are the perfect example of fintech solutions that had a major impact on local economies. M-Pesa, for example, contributed to creating prosperity in Kenya by lifting 2% of households out of poverty. On the other hand, out of 1.4 billion population in Africa, only half of them have a bank account. And at the same time, 51% have smartphone. And this penetration rate is expected to reach 80% in 2030. In a country like Nigeria, for example, only half of the population has access to the internet. This is a massive opportunity, not only for telecom operators and banks, but also for fintech. In Africa, SMEs account for more than 90% of businesses, and they contribute about 50% of the GDP. But 90% of the transactions done by these SMEs are in cash. This is a huge problem because these SMEs need access to credit and they need a reliable way to transact, to pay their bills, to send and receive money, especially from remote areas in Africa. And 90% of our economy is still informal. So if you look at some fintech companies that are bringing these SMEs into the formal economy, it means the development of other key sectors is not possible without the necessary financial infrastructure. And the fintech companies are building this infrastructure. So I believe this is only the beginning. Fintech will become bigger, and but it will always be an enabler of other sectors.
Okay. Now, Miriam, I want to talk about risk premium. We've seen a lot of international organizations as well as local investors apply a higher risk premium when investing in the African continent. When you're looking at projects, initiatives, startups that have a high focus on impact and, let's say, development, how do you evaluate risk? Is there a difference to other projects?
No, it's not very different. First of all, we have a very tailored approach to evaluating the broader effects of our investment on both social and environmental factors in Africa, both during the due diligence phase and post-investments. We first assess these risks for all potential investment, and we use an internal impact measurement system at IFC called AIM to gauge the development impact of each investment. Given the increasing focus on climate change, for example, we have now included climate risk to our framework. But I would say, first of all, each project is generally categorized based on their environmental and social risks. It could be called, A, B, or C, which will help determine the level of due diligence and monitoring that we require for this specific project. We usually employ very detailed impact measurement and reporting tools to track the social and environmental outcomes of our investment post-investment. And this starts with setting measurement metrics, measurable targets, and using indicators to assess progress and performance over time. Yeah.
Okay, brilliant. Well, Miriam, thank you so much for joining us today, for sharing your insights. That was Miriam Diop, Regional Head for Africa VC Direct and Funds at the International Finance Corporation. And next up, we speak to two founders who are actively involved in developing Africa's social economic landscape, as well as bringing financial inclusion. We speak to Sidonie Laterre, CEO at Kobo Hub, based in the DRC, and Régis Bamba, co-founder and CPO at Jamo, based in Côte d'Ivoire. Sidonie, I'd like to start off with you. So Kobo basically is involved in accelerating startups in the DRC. How was your experience in bringing this to life?
Thank you for the invitation. So I would say that my experience as a CEO of Kobo Hub in Kinshasa and DRC has been both challenging and rewarding. Kobo Hub is an incubator that supports startups in various sectors, including technology, arts, agribusiness, and innovation. We have created a dynamic ecosystem that fosters the growth and development of young company in DRC, providing to them resources, training, networking opportunities. And my role has allowed me to collaborate with passionate entrepreneurs now and for 7 years now, and we build a positive impact with our initiative on the local ecosystem and social fabric.
And I like that you talk about the local ecosystem, and I want to come back to that. But Regis, coming to you first, Jambo has been described as a challenger bank. What was missing in the financial services landscape in Côte d'Ivoire that made you want to start this?
Well, thank you for the opportunity too. I mean, the past years, we've seen the growth for financial services like mobile money, which came and filled the gap in terms of financial inclusion. The bank rate adoption remains very low. And our idea with JAMO was, okay, how do we increase that bank rate adoption? And how do you provide financial services a bit more sophisticated than mobile money? And that's what we're trying to do. We're trying to build on top of mobile money, and we're trying to give access to products like payments, savings, loans, and most importantly, we're trying to educate people on those financial services that goes beyond just deposit and transfers.
Yeah, exactly. And coming back to you, Sidonie, you mentioned earlier impact on the local ecosystem. A lot of the startups that you have to deal with are really working with the community at its most basic level, from agribusiness all the way through to financial startups. Was the impact side important to you when starting?
I think there is DRC is a land of opportunities, and we are facing a lot of challenges, but the challenges are also a big opportunity. So I think I will focus on the challenges, because now COBOB, our business is built on the challenge of the ecosystem. So entrepreneurs are our clients. So the challenges we are faced are many here. The first is access to the funding remains a major difficulties for many startups in Africa, also in DRC. Additionally, we have infrastructure while providing can still pose problems, especially in terms of connectivity and access to advanced technology. Training, also skills development are significant challenges, as it's crucial to ensure that entrepreneurs have the necessary skills to success.
Yeah, and coming back to you, Regis, you took the route of going to, being a part of Y Combinator. I'm quite curious how the local ecosystem viewed that, and also whether you considered local investments prior or afterwards.
I think it's inspiring, that we were able to get into that. We were the first company to get into YC, and it shows that it's possible, and we inspire other people to take that route. Why did we do that at the time? Is because the offer for local investment was quite low and not very, I would say, suitable for us. So that's why we started looking outside, and it came back. The feedback that we initially had was, your region as a Francophone region, we don't know that region, and nobody has taken bets in this region. And then we decided, okay, let's just go for the best of the best in the world, and then we got it. And as soon as we got in, the narrative changed for us, basically. So people started getting interest. We started getting interest from other from other investors in the region. So definitely, yes, it was probably the best move to do for us at the time.
Okay, now coming back to you, Sidonie, when we're looking at the African continent, there's a lot of problems to solve. You deal with startups that are actively trying to solve these problems. Where do you see the biggest opportunities for problems to be solved in the near term?
I think despite of these challenges I had mentioned, I'd said opportunities are abundant. Africa is a continent in full growth and with an enormous potential, especially in the field of technology and innovation. Young African entrepreneurs are incredibly talented and resourceful. By leveraging new technology and tapping into a local and international market, there is an immense potential for African startups to drive and grow.
Okay, brilliant. Now coming back to you, Régis, you talked about how it was a big win to be a part of Y Combinator. What does the future look like in terms of win? What are your next biggest goals?
Well, I have to admit that, I mean, these days at this era is one of the best time to be and to innovate and to have an impact in the environment. And we are very, very excited about what's coming for us. We did an expansion in Senegal recently. Things have been going very well. The WAMU zone, so the West African Economic Union, is stable. We don't have any currency issue, so it's easy, very easy for us to actually deploy to other countries, and I think that's what we're going to do. And then we're also going to try to push new products. Our big thing here is how do you make sure people have access to those products, and how do you make sure that they trust those products and they understand the value that they can bring to them. So, and adding to that, there is a big shift in cash-based transactions, and this is very exciting for us. We have like another route for us to build, basically.
And staying with you, Régis, is the future only Francophone Africa?
For us, for now, that makes sense for us. But I have to admit that if we want to build for Africa, we definitely have to explore other demographics. So we'll have to think about that. But for now, the easiest way for us to keep expanding is basically through Francophone African countries. Yes.
Okay, brilliant. Coming back to you, Sidonie, looking at the future of Kobo Hub, where do you see yourselves going? Is it a DRC play, or are you looking to expand and scale in other markets?
Okay, Kobo Hub, we are very exciting about the African market, especially the French market, French country in Africa. We are also focused in art and tech. I'm very happy to see Jambo is an amazing startup here in our ecosystem. We are follow them as a role model. So yes, we see how to develop more hub and accelerator program in different city in Congo. Also, we are regarding to other country like Burundi, Chad, Côte d'Ivoire, Cameroon. Yes, so we are very excited about the potential of also the creative economy and how technology can support art and culture in Africa, specifically in French country.
Okay, brilliant. This is where we leave it. Thank you so much for joining us, to the both of you. That was Sidonie Laterre, CEO at Kobo Hub, based in DRC, and Régis Bamba, co-founder and CPO at Jamo, based in Côte d'Ivoire. Now, this is how we wrap up Startup Caps for this season. Thank you so much for having joined us for the journey. It was an absolute pleasure bringing you the latest and the hottest in startup capital movements in Africa. My name is Tanya Habimana, and we'll see you soon.